got a lot of individual stocks that we're focusing on in our special top 10 segment. So now you go first, Tata Motors.
So, as we heard, right, the Tata Group will be investing $1.6 billion into that battery manufacturing plant in Gujarat. Now, they had an analyst meet yesterday, and the takeaways were quite positive. So, I just wanted to put that on board. Agartha's Energy Solutions, which is the company that will be, developing these capabilities to deliver batteries. They will be supplying a range of batteries for across all vehicles, whether it's passenger vehicles, commercial vehicles, for the electric vehicle space. So they're very bullish on the EV sector. They aspire to be at the forefront of the global battery manufacturing industry, and they say that supply chain optimization is the goal for them. They're looking to establish a cathode active material facility as well adjacent to this gigafactory to ensure uninterrupted supply of key materials. And this is a very big step forward in terms of localization, bringing down their costs, supply chain, etc. For the EV space. Now they're working also on a solid-state sodium battery, vertical for the EV bus segment in the medium term. So not only passenger vehicles, they're focused on commercial as well as the bus segment too. And the company continues to maintain its target of reaching double-digit EBITDA margins in the medium term. A lot of brokerages have written on Tata Motors post the analyst meet. I just chose to put forward one of them, which is Nomura. They say that Tata Motors has all the levers in place to gain further market share, and they have new product launches like the Curve, Sierra, Avinia, and the network expansion, which will aid their market share as well. So once again, I'm going with green on the stock. Despite the stock being at 52-week highs, there could be some more traction.
Okay, I'm sticking to the Tata Group. Then I'm tracking Tata Communications. They had an analyst meet, and the key takeaways is what I'm going to state out. They're indicating that they're looking to double the digital revenues. I think it was around 14,000 crores. Or they're saying by FY27, they're looking at it going to around 28,000 crores. The margins, they're saying that it's likely to be in the vicinity of around 23 to around 25%. And the ROCE, they are factoring in at around 25%, which is maintained, what they've mentioned in the past. CapEx, it appears it's a little bit higher than what they've done in the past. That's around $300 million odd. And the net debt to EBITDA, well, it's currently at around 1.3. They're saying that it will stay below that two times net debt to EBITDA. Finally, they also mention about the monetization, which they have been talking about. So they're clearing titles. They're making some of these assets ready for monetization. We'll have to see how that works out with regard to their capex plan. And in the last few quarters, they've been reducing debt. So we'll have to keep an eye out on that and see how that moves as well. We'll be chatting with the management as well in the next 1 hour or so. So stay tuned to that conversation.
All right. Well, so we'll keep an eye, and of course, the management chat also coming up. Now, this is an important story. In a political nudge to oil marketing companies, the government expects refiners, OMCs, to reduce fuel prices at the pump. Sources say this is on the back of health of OMCs, which is being perceived to be close to normal now. HPCL, though, remember, booked net losses of almost 9,000 crores in FY23. But incrementally, the government sees health improving, and hence the nudge to cut prices. Sapna is here to tell us more. Sapna, hi, morning.
Hi, Prashant. Morning. Extremely well put. So that's what the scenario is. Government has been saying close to normalcy and within bounds of legitimacy. I mean, whatever may be legitimate, at least pass on some benefit to the consumers. The perspective here is that the consumers expect fuel prices to be stable and then trend downwards. So I think the hint over here also is not just in terms of the daily price revision, which has been frozen since April last year, post the Ukraine conflict. I don't think that's what they are talking about. I think what they want basically is, companies to, kind of cut price. Basically, that's it. Whatever maybe in the realm of possibility. And they have not spoken about any timing or by how much. All of that has not been said. It's a simple message coming in from government quarters. A simple but strong message that some benefit needs to be passed on. We did ask about the accumulated loss issue of companies. So as you rightly pointed out, HPCL is the one that is still suffering. Yes, in the last 3 quarters or rather in the last 2 quarters, the losses have really come down. They started off with 21,200 crores end of Q1 last financial year, and we are now down to around under 9,000 odd crores. So some bit of recovery still has to be made, but the government still expects the current quarter to be good. So the companies had a good quarter last Q4, and again they expect it to be a good quarter. So I think there is a clear message and a bit of pressure from the government. It remains to be seen how the OMCs respond to that. Do they really go ahead with the price cut? And if yes, in what form, fashion, and when?
All right, thanks a lot for that, Sapna. We'll keep an eye out on all these stocks, HPCL, BPCL and IOC. But let's move on. Mazagon Shipyard has been one of the strongest stocks in the last many days. Gati is also on our radar. Vivek is here to tell us more about that. Vivek, hi, morning.
Well, good morning. I'll take you through, the operational update for the month of May that Gati has shared first. So what Gati is saying is that total volumes for the month of May, including the surface and the air express segments, has come in at close to 98 KT. Now, this is up 9% on a month-on-month basis and is gone up by 1% on a year-on-year basis. What the company says is that on a year-on-year basis, actually, the base quarter was quite strong. Now, coming to Mazagon shipbuilders, along expected lines, the company has signed a memorandum of understanding with Thyssen Group Marine Systems. Now, this particular MOU is for the development of submarine systems that they would be building and developing in India and for the Indian market. Now, what would be the scope of work as far as Thyssen Group Marine System is concerned? They would be contributing, the technology mainly, so engineering and design of the submarines, as well as consultancy, while Mazagon Dock's responsibility would be construction and delivering the respective submarines. An important development, however, important to see what kind of orders that this particular JV does get in.
Okay, all right. Thanks a lot for that, Vivek. Well, let's go across to Sonal Bhutra. She's joining in to tell us about some more stocks that she's tracking. Morning, Sonal.
Good morning, Nigel. Well, 3 stocks on my radar today. Let me start with Aether Industries. They have filed a letter of intent with a US-based company, which is a global oil field company, and that is where they will be contract manufacturing 4 products for the company, and the total volumes that they have to deliver is 16,000 tons per annum. But again, it's a letter of intent. We'll have to see how the execution and the final agreement goes on this one as well. For Tita Wagons, they have a board meet that is on the 10th of June, and this is to evaluate and approve fundraising. This would be via issue of equity shares or other securities as well. Deepak Fertilizers, we have been speaking about a block deal. So 2 entities have sold Deepak Fertilizer shares worth 131 crore rupees in the open market. One of them is an FPI, which is Small Cap World Fund, which has sold 23.54 crore shares, which is around 1.86% of the stake in the company. And post this transaction, Small Cap's holding in the company will fall to 3.08% versus 4.94% earlier.
Okay, thanks a lot, Sonal, for that. Well, let's do a quick recap on all the stocks that we have on our radar today. Stocks with positive news flow. There's Tata Motors, Tata Communications, Mazagon Dock Shipbuilders, Gati, Aether Industries and Titagarh Wagons. While stocks with negative news flow today, IOC, BPCL, HPCL and Deepak Fertilizers. But what also, stays relevant is what's happening in the world of crude. Manisha Gupta joins in to give us a quick update on all of that. Manisha, oil prices have been on the rise because of the Saudi output cut. Tell us a little bit about what the way forward could look like.
Well, yes, that is the reason we have seen support continue for the crude oil prices. Since the Saudi Arabia or the OPEC and allies meeting, we haven't seen the crude prices come below $75 a barrel. There has been more support after the U.S. crude oil inventories also have seen a decline. And there is a Citi report now which says that for the rest of this year, you could be looking at the crude oil prices ranging between $72 on the lower side to $90 a barrel on the higher side as well. So while the crude prices are trading in the positive, that's really not the case for the metal prices. You have gold and silver yet again trading at a 2-month lows. The surprise rate hikes in Australia and Canada seem to be weighing on, and so does the fact that there is strength in US dollar and treasury yields as well. The China trade data came in on the weaker side. The China copper imports especially, fell by 4.6%, and that's weighing onto the copper prices right now. With the China trade surplus shrinking to a 13-month low, the markets are anticipating a stimulus to come sooner than later, and that is what is keeping a support in metal.
All right, Manisha, thanks very much for that. So that's copper and commodities in focus. We'll take a very quick break here. We'll come back. We'll get you an exclusive conversation with Niranjan Gupta, CEO, Hero MotoCorp, to decode challenges in the electric vehicles segment. Later, we'll connect with Deepan Mehta, Elixir Equities. Lots of stocks to discuss. It's a market which is buzzing with mid-caps and small caps. The discussion coming up. And later, the management of Happiest Minds also joins in to discuss the downward revision we've seen by some global IT services companies and the implications, if any, for Indian peers. Stay tuned.